Welcome to Investors Insight, where today's topic is fireworks in the second half. We hope that everyone is excited to celebrate the July 4th holiday this week. The markets will be closed on Thursday in observance of the holiday, but as always, we have a lot to cover today. So before Ty gives an update on the election and liquidity, I want to start by looking at how the market might perform based on historical performance in the second half of the year. So stocks are heading into the second half with positive momentum. However, elevated valuations, overbought conditions, and underwhelming market breadth point to potential volatility. But historically, a strong first half like we had tends to be followed by above average second half returns. So as highlighted in this chart, the S&P 500 has followed up a positive first half return with an average second half gain of 6%. Furthermore, when first half gains were 10% or higher, the index posted average gains of 7.7% in the second half, with 83% of occurrences producing positive results. Also, on the far right chart, market returns averaged 4.2% in the second half of election year, something that Ty will talk about further here. And so while history favors a positive second half of the year for markets, it's important to note that bull markets are not linear. So as seen in this chart, the maximum drawdown for the S&P 500 during the second half has averaged negative 10.3% since 1950. However, seasonality data suggests dips should be bought in the second half if appropriate. So as we start the second half of the year, we are hopeful that history can be a guide and that the markets remain positive. As always, no guarantees, but we're hoping we have celebratory fireworks in the second half of the year. So Ty, we had a big debate last week, presidential debate. Talk about politics, election, market performance in election years, and also talk about liquidity.
Well, I'm sure the talk of most of your conversations will be focused around the debate. But, some other topics that may be worth bringing up is in this chart here, the S&P 500 has increased in 13 straight presidential re-election years. So I know that's kind of specific, presidential re-election years, but that dates back to 1944. And so as you can see in this chart, the average return is about, 15, 16%. So far, we're off to a pretty strong start for the year. And, we're looking for that to continue as we go into the election, of course. Past results don't mean future performance, and we have some hurdles, unique hurdles as every year brings. We have a possible rate cutting cycle or still rate pausing. Of course, a pretty heated, election coming up with two former presidents, which is pretty unique. And then in addition to that, we have, what we keep up with the liquidity tracker. And so liquidity is just the amount of money in the system. This can be from banks, from companies, from individuals. But essentially, the theory is the more money in the system, the more likely people are to spend it. And then at that point, it kind of drives the economy a little bit. And, even more specifically, the stock market. Think about what you do with your leftover cash. You may invest it or save it, things of that nature. And so as you can see, year to date, we have this chart where it shows January and February were good, strong liquidity months. March and April, some liquidity pulled back, which means money was taken out of the system. May was a really big month for liquidity going back in. And then June was a little bit taken out. But then also we have moving forward kind of the forecast here. And so once we get past the 1st of July, we pretty much have a good runway of liquidity or money into the system until kind of the beginning of September. We do have one little brief hit of money coming out around the end of July. But for the most part, we're getting kind of flush with cash here or expected to be in the near future. And that's something we want to keep an eye on, specifically for what we're doing here, investing or especially for the economy overall. And so, I would also add, I know Bobby talked about being closed on the market being closed on Thursday. We do have a half day on Wednesday as well. So something to keep your eye on.
Yeah, thanks, Ty. So again, a lot to cover. Again, we hope we have celebratory fireworks in the second half of the year. No guarantees, but we like what history says about the second half of the year, especially in election years. So we'll obviously keep everybody posted. Again, have a great 4th of July holiday. We'll see you next week. Thanks.